Are we streaming?
Brian, just tell me when we're ready to stream.
All right, welcome to the February 15th meeting of the Wyoming Stable Token Commission. We are running a few minutes behind. There was a little bit of a delay getting some folks online. Director Apollo, thank you for being here. I think we should go ahead and probably take the roll.
Thank you, Madam Chairman. Happy to do so. So we'll perform a roll call for quorum. Commissioner Pope? Here. Commissioner Naves?
Here. Here.
Commissioner Reville?
Here.
Commissioner Wallace?
Here.
Commissioner Meyer?
Excused, I think he will be joining us shortly.
Governor Gordon?
Excused,
Madam Chairman,
here.
you have a quorum.
Thank you. I think we'll jump right in. I think we have a robust meeting today. Perhaps not a lot of action items for votes. Save some approvals of the minutes and budget. So we'll go ahead and jump into the agenda. Do we normally take a formal vote to approve the agenda? I can't remember.
Madam Chairman, I think it's typically just a verbal
Okay.
approval to make sure no one has any questions. So I'm happy to go over that if now's the time.
Yeah, that'd be great. Go forth.
Thank you, Madam Chairman. So for today, we'll go through this agenda. We will review and approve the meeting minutes from both STC-009, that was our December 21st meeting, and as well as our STC-010 meeting, which was January 18th. We had punted on December because we had a truncated meeting in January, so we'll go through both of those today. We'll go through the monthly budget review, both the summary and detail sheets for the month ending January 31st. And then we'll talk about rescheduling our upcoming May meeting around some of my travel for stable token work. We'll go through our industry update. Of course, many things happening, both in the stable token world and in the broader cryptocurrency, blockchain, digital asset space. I'll provide an update on the ongoing budget session, where we are, what we're tracking, what the next steps are anticipated to be. We'll probably spend the bulk of our time on the agency structure memo. This is going to be covering off on some decisions we need to make as a commission of how we should be operating going forward and what positions we want to take. Then we'll move on to the RFP preparation memo. Again, Madam Chairman, as you said, not really thinking we need to take votes on much of this, but just to get everyone aligned on what our next steps are for those pursuits. And we'll highlight some of the next steps we have and what we would expect to have done for the March meeting. We'll go into public comment. Speakers will be limited to 3 minutes per party, and will be asked to provide both their first and last names for the public record. We'll quickly cover off on upcoming meetings, and that will be that. Are there any questions on the agenda?
Commissioners, any questions, concerns, changes to the agenda? All right, hearing none, let's go forth and hopefully everyone has had a chance to review the meeting minutes from December the 21st and January the 18th. Are there any corrections or amendments to those minutes? Hearing none, I would entertain a motion to approve the minutes, and I'm happy to either take them one at a time or both together, since there doesn't appear to be any corrections.
Move to approve both sets of minutes, STC-009 and STC-010.
Is there a second?
I'll second it.
Okay, any discussion? All those in favor?
Aye.
Aye.
Opposed? Okay. Moving on to the monthly budget review.
Thank you, Madam Chairman. I'm quickly going to note just a couple of things before we get into the monthly budget review. First, that I'm seeing that Commissioner Meyer is now on the line. Commissioner Meyer, hope you're feeling all right. Second thing I'll quickly note is there are sign-in sheets in the back of the room. So if you are here attending in person, if you wouldn't mind signing those, we certainly appreciate it. And then finally, before we get to the budget, a disclaimer that I quickly read out before these meetings. Any decisions pertaining to the Staple Token Initiative will be made by the commissioners of the Staple Token Commission or the state legislature in public meetings such as this. Those decisions will be made known through our website or Twitter account or analogous platforms of other state entities and should be considered the only source of factual information. So with that said, I'm happy to move on to the budget review. You'll, as usual, have two different pieces of paper in your folders. The shorter one is your monthly budget summary for January. The longer one is the substantiating detail. So if you were to look at the budget for January of 2024, as usual, the bulk of it is the salaries and benefits. You'll note here, and I've added some wording around it, that a portion of benefits that were intended for December were not made in December and were actually captured in January. So that's why that January number is a bit higher. And again, we do have that month-to-month change column there, so you can see that. But our average expense is where we expect it to be. You'll also note that we had both in-state and out-of-state travel that we captured for the team and for some of the commissioners. This had occurred over the course of some of Q3, some of Q4. We had hoped to get this in by the end of the year, calendar year. We ended up getting it done in early January. Doesn't really affect us because our fiscal year ends in June. So there's really no accounting issue to worry about there, but wanted to highlight that. So that's whatever outstanding reimbursements there were have now all been captured. Everything going forward will be taking on as it comes in. You'll note that there are now telecom charges. It seems that we had somehow not been on ETS's radar with things like VPN services and cell phone services. So that has been aggregated into one charge here, from my understanding. That should be less going forward, about $40 or $50 a month. And that leads us to a monthly expense of $19,891.49. Net, for this project in totality, for the budget fiscal year 23, we've now spent $153,144.46. That amount is about 30.5% of our 500K allocation that we were given in the state statute when the Staple Token Act was passed. So we're tracking pretty well on that front. If you were to flip over to the detail sheet, again, this one's pretty granular, so I need to go through particular line items. I do just want to call out something that we had spoken about at our last discussion, which was that based on the way that funds came into the agency, it was put in the 600 series, which was grants, and then allocated as we spent it. And that had resulted in some instances on the sheet where you had a surplus or shortfall that was way out of line with our actual expectations. So I've worked with A&I, particularly with Rory Horsley, and I thank her very much for her assistance, to modify some of these budget lines, and these surpluses and shortfalls are much more constrained. So they're much more closer to the target because we have a pretty good projection of where we're going to be by fiscal year end in June. So that has been adjusted. And I think the only other thing to mention is, you know, we've been priding ourselves on, as the governor had mentioned in a previous meeting, the fiscal conservatism of this organization. And we are still projected to spend less than half of the initial allocation by the time we hit June 30th. We'll have a projected surplus of $273,000, which is 55% of what was given to us. We'll spend less than half. Are there any questions on either the budget summary sheet or the detail sheet?
Anthony, does that original appropriation expire on June 30th, or does it revert or not? I can't remember from the original legislation.
Madam Chairman, the original legislation is silent on what would happen on June 30th to that allocation of capital if it was to not be spent, but we can dig in a few moments on where we are with the budget bill, because the expectations there will be functionally a rollover, and I'll happy go into details on that in a moment. Any other questions on the budget?
Commissioner Pope?
Have you done an analysis to see how much is expected to be rolled over?
Through the chair, Commissioner Pope, yes, that is the $273,000. That's the projected surplus is the line item. It's a little tough to see because I was trying to figure out how to get the headers to show up on the second page, but didn't quite get there. The projected surplus is that 273K. So that's how much we would expect to still have. That's 55% of the initial allocation.
And I think, this is a little bit in my bailiwick, I know just enough to be dangerous. I think if everything is silent, it does revert. So I can look into that, but unless the current budget bill, which I don't think it does, says you get to keep that, I think the standard is that it does revert, but we can dig into that.
Madam
little
Chairman,
bit
the
later.
short answer there is it would get rolled over in the budget bill. So
Oh,
we'll
great.
get into that
Okay,
in a moment.
Super.
Are there any other questions for anyone on the Zoom call regarding the budget?
No, nothing here.
None here. Thank you.
Thank you, Madam Chair. Thank you, Jeff and Joel. The next item on the agenda for us is rescheduling STC 14, which is our May 15th meeting. Long story short here, the governor was invited to speak at the DC Blockchain Summit on May 15th. He asked that I attend and speak in his stead, and I am looking forward to doing that. So we had a meeting scheduled for May 16th. This event would be May 15th. It'd be a little tough to be in two places at once. So I would like to propose that we can kind of come to a soft agreement that will move meeting number 14 from May 16th to May 23rd, keep the morning session. And I've already confirmed with Bonnie in the governor's office that that would work for the governor. So unless anyone has conflicts they know about now regarding the 23rd, I would just like to kind of get a soft agreement there and then move it as soon as we're done with this discussion this morning.
I'm clear on that day. Any,
No conflicts for me.
it's after
clear.
tax
Yes.
season? Online, any major concerns with that date, or is it looking okay for now?
I can make that work. This is Jeff.
Thanks, Jeff.
And that works for me too. Thank you.
I'd say get it on our calendars before something else shows up.
Mhm.
Thank you.
Madam Chairman, I'm happy to do that. So thank you for that. Moving on to the stable token industry update. Couple things to cover off on. Some of it we'll even start with is not stable token specific, but certainly bears mentioning. So first on the list is Utah passed a bill that was very similar, I'll say, to ours regarding the prohibition of having to reveal your private keys in any kind of criminal or civil proceeding. That passed on January 26th. So there are people who are looking at our statutes and looking to leverage the work that this commission, the select committee, and others have done over the last several years. So congratulations, I think, are in order. Next thing I wanted to mention here, and again, this is all on our website in the news and reporting sections. This is available to everybody. Next is Coinbase put out a very powerful report at the end of last week. Essentially, they looked at all credit card transactions over the course of 2022 in the United States, and they looked at the fees that would be associated with those purchases. And their analysis was, had those purchases taken place on a blockchain with low fees instead of a credit card with percentage of fees, the American populace would have saved $74 billion, which nets out to about $600 a household, and merchants themselves would have saved about $126 billion. So net, $200 billion of savings from using blockchain rails instead of credit cards. And to put a fine point on it, this is something that during our JAC presentation, we had already sat down, but there was further discussion amongst the appropriators. Representative Stith brought up this opportunity exactly, and now we have the math to back it up. So that is something, if we were able to hypothetically get Wyoming stable tokens on a very familiar form factor that looked like a gift card, we could get those into circulation pretty quick. And you
What was
wouldn't
the
have
time period on that again, of that analysis?
the entirety of 2022, as far as I can
So
recall.
just
from
a
my
year.
reading. Yeah.
Hmm.
And then finally, on the kind of the non-stable token updates, Chainalysis, which is one of the blockchain monitoring and intelligence companies, they put out their annual crime trends report. The big takeaway from that one was they found that only 0.34% of on-chain activity was used for illicit action. And I think that reinforces what we heard from Mr. Ari Redboard when he was here from TRM. You know, there's a narrative that we hear about crypto being used for by you know, those who are more nefarious in their actions, and the math doesn't back it up. And I think it's important that we bring those points forward because people are saying things in other venues where it's being magnified that crypto is funding a lot of bad things and not necessarily what's happening. So that's the kind of non-stable token broader industry update. I'll pause there if there's any questions on any of that.
Commissioner?
Director Apollo, does the report discuss the use of paper dollars and comparatively?
Through the chair, Mr. Pope, I don't believe that the Chainalysis report has that. I do believe I pulled in a different report into our news section. I believe it was a NASDAQ study that came out at the beginning of this year. $3.1 trillion of illicit activity was kind of the broad, like this is how much cash is used for nefarious activity globally around the year. Did not mention Bitcoin or cryptocurrency once. And that I believe is also in our repository. Any other questions on the industry update? Okay, moving forward. On to a couple of domestic items. So as everyone likely saw, Federal Reserve has kept rates where they are. So we are still in a fairly high interest rate environment. You know, again, they previously signaled that there would be 3 cuts to the interest rate along the course of the year, and we still, I think, do expect that. But for now, everything is staying where it is. We had Treasury Secretary Yellen saying that the U.S. needs better stablecoin regulation. This is part of the FSOC presentation she had earlier in the month. I think her concern is probably twofold. One is if you're backing stable coins or stable tokens with things that are not low risk, that does present some issues with volatility, and also some concerns around things like bank runs on stable tokens. And again, her speech is uploaded for everyone to see. The Federal Reserve put out some, I guess, more of an educational piece called Governance of Permissionless Blockchain Networks. I think it's something that most folks on this commission would already be familiar with, but for anyone who's maybe listening and not quite sure what we're talking about, it gives a good idea about permissionless networks, node infrastructure, wallets, and all of that. And then one other kind of big reveal, I think it was just yesterday, was Citibank is now testing tokenization of private equity funds on Avalanche. That is similar to what we've talked about before with JP Morgan using Avalanche subnets for their testing. That's probably happening overseas. And I do believe the DTCC is also involved in that pilot program. So that is the domestic update. And then I would turn over through the chair to Commissioner Navas. You wanted to add anything to that? I know you sent me a bunch of links. I believe all those you sent me are on the website as well. So I want to make sure I didn't miss anything that you provided.
No, Anthony, the report is accurate. Thank you.
Thank you.
Commissioner?
Director Apollo, quick update on the AICPA's exposure draft for sufficiency of assets for redemption. The comment period for that has ended. However, members of the working group for that are interested in working with us to identify changes and differences that are caused by our governmental nature.
Through the chair. Yeah, thank you, Commissioner Pope. Thank you for staying in contact with the team there. Whatever you need from myself, I'm happy to help. But if we wanted to make that a bit of a broader commission effort, I would be supportive of putting together some thoughts in a cohesive manner. I know in our last meeting, the governor was also interested in what you had referred to as the rules subcommittee. I think this is not too far abreast of what that might be doing in due time. I think it'd be great for us to get our names out there. We are so early in all of this. It makes sense to carve out some space for ourselves.
Thank you.
All right, moving on to some news from around the world. These will be just kind of quick headlines I'll read off. Bank of Spain is now selecting partners for their CBDC testing. The Bank for International Settlements announces their own CBDC and tokenization project for 2024. The Bank of England had done their survey and has the comments are coming in now, and people feel that their proposals need some rework. Again, that's all on our site as well. India is looking at ways to make CBDCs available offline in more rural areas of the country, which is interesting. And then we've started to see, now that Javier Milei is in Argentina, Tether and Circle are starting to take over a fair share of their market there. He's been talking about dollarizing their economy for some time, and it seems like he might be doing it with stable tokens. So that is the international update. Any questions on that? If none, I'll quickly move on just to wrap up with a little bit of news about ourselves. So one is there is now a decentralized social media application called Farcaster. Essentially imagine it's Twitter, but using decentralized nodes instead of Twitter, where you actually own your own social data. It's been taking off very quickly. We're the first, I put us on there, we're the first government organization on there. So that is a feather in our cap on that front. Next up, ETH Denver, which is the largest blockchain event, I think, really around the world, will start at the end of this month down in Denver. It started out as Ethereum focused, but it's pretty much all blockchains now, so it's a pretty good event. I'll probably be popping back and forth from there at the end of the month, and it goes into early March, and hopefully I will be speaking there as well. And then finally, there was a cryptocurrency analyst named Paul Barron. He's got a YouTube podcast that covered the work we've been doing with the Stable Token Commission, which received over 10,000 views in 24 hours. So there is certainly a lot of interest in what we're building here. And I think that those metrics kind of fortify that. So that is the end of my update from the news perspective. Any questions before we move on to the budget session update?
Any questions from online or otherwise?
I have none.
All right, on to very close to home news.
Sure, thank you, Madam
Down the
Chairman.
hall news.
So generally speaking, the 2024 budget session, we're gonna break this down into 3 different parts. One will be just a quick recap of where we left off at the Joint Appropriations Committee. Then we'll talk about the 2 bills we're tracking and how they're working their way through the legislature. So when we met last time, we had just gotten through the Joint Appropriations presentation. We had passed during that time with a 7-5 vote. Most importantly, since then, there were several rounds of reworking the budget and doing these round robins where cuts can be made. I'm sure additions could be made. I don't think that happens quite often. But we made it through intact, and we were therefore included in what we refer colloquially to as the budget bill, but that is HB 0001, General Government Appropriations. So that is currently sitting in the House. It has, as far as I know, not been formally introduced yet because it is so robust that the House is trying to work through the other bills it has on its docket first and then get to the budget bill. I had originally been told the budget bill will be presented today, and then we get to the first half of the agencies then, followed by perhaps stable token tomorrow afternoon. Just looking at the calendar, it does not seem like that is the cadence it's going to go at. So I will be keeping a monitor on that every morning and every evening to make sure that we're in the room when that conversation does happen. That's the logistics around the budget bill. To dig into the details of it, we do have it again on the link. The commissioners who are online have it on it's linked in the agenda. And for those in front of you, you can see this is the documents with 24 LSO-0491 at the top. A couple of things to touch on. So this is, again, just I didn't print out the entire 160-page budget bill, but on page 63, the bottom of that, you'll see Wyoming Stable Token Commission. A couple of notes to make off the cuff. So this is our full $5.8 million allocation that we requested. You'll note it is not in the general fund. It is in other funds, and that's explained by a footnote. We'll get there in a second. You'll also notice that we have no authorized employees, whether that's full-time or part-time. The implication here is that all resources that we bring on will be on AWEC contracts. That's at-will employee contracts. That's currently how I'm situated. And for context, that is how some of the other, we'll be talking about component units in a second, but that is how some of the other authorities or agencies that look a little bit more like us are structured, where all of their employees are AWEC as well. So I don't think that's a cause for concern. That's pretty standard, but just wanted to call that out so that was not a surprise. If you flip over that page to page 64, this is where we have our footnotes on the budget bill. So the first footnote essentially says that next go around, we need to go through the formal process that we kind of sort of went through this time. Obviously, we came in a bit late. We did our best to meet the criteria and deliver the JAC what they expect in the format they expected it, and I really appreciate the help that the commission, others in A&I and elsewhere gave us. However, for example, our agency is not even in the reporting system that they expect the reports to come out of. So the expectation is for the next biennium, which would be the 2027-2028 biennium, we would go through that formal process, which I don't think anyone will have qualms with. If we make it to 2027, I think we're all gonna be pretty happy about that. So that's footnote 1. Footnote 2 is that this is where we get into the differential between the general fund and the other fund. So this is an other funds appropriation that is appropriated from the Wyoming Stable Token Administrative Account. We'll refer to that later as Fund 204. That's where our operational expenses will go in and out of. It's also the intent of the legislature that this appropriation not be included in the Stable Token Commission's standard budget for the next biennium. So the second half is to say, the request we've made was a one-time deal. And that's fine because we do expect to be self-sufficient hopefully by the next time we actually get to the JAC. So that, again, didn't raise any eyebrows for me. The one last thing before I take questions on this is the second piece of paper that you have in front of you, you're here in person. If you are online, you need to skip down to section 300, which starts on page 101 of HB 0001. This is budget balancers transfers. If you go to footnote or section N here, that's the stable token, you'll see that the state auditor shall transfer $5,800,000 from the general fund to the Wyoming Stable Token Administrative Account. So that's how we're getting money into our operating account, which then is considered as other funds when it comes back around. So it's a little bit circuitous, but that is the flow. And this is Madam Chairman, to your question from earlier, that's the second sentence here in footnote 300N. This transfer shall be reduced in an amount equal to the amount of unobligated, unencumbered fund balance in the Wyoming Stable Token Administrative Account on June 30th. So essentially, they're putting the funds in the bucket where we already have funds. And they'll just say, when July 1 rolls around, what is $5.8 million minus 273K? That's how much new money we're going to put in here as other funds.
Okay, so Director, I get it now. You don't necessarily get $5.8 million plus $500,000, but whatever's left over, I transfer, I hold that amount back with whatever's left over. So the entire, gotcha, okay.
Right, so Madam
That makes
Chairman,
sense.
if I understand correctly, I think the kind of easy mental model here is on July 1st, we have
You get
$5.8
$5.8
million.
million, whether you spent $500,000 or zero of that original $500,000.
That is my understanding, yes. To put a bow on the budget bill, again, I will be tracking this very closely to see when this is up for its introduction and subsequent vote. If I understand the process correctly, this will be a simple majority vote because it is a budget year, is a 51% vote in the legislature. And that is in opposition to the Stable Token Act amendments that are in the Senate, which we'll talk about in a second. But first, I want to pause because I did just throw a lot of information at you. I'm happy to answer any questions about where we are with the budget bill or on the House side of things.
Questions regarding the legislative process, and Director Apollo is correct. They're introducing the budget bill today and tomorrow. Second reading is allegedly going to be on Monday, just so state employees have to come to work. And then third and final reading is projected to be on Wednesday. They can push that back. They do, I think, typically usually prioritize that schedule, so it's likely it will go at that time, but you never know, things could change.
Understood. Thank you, Madam Chairman. That's helpful. If there's no other questions, and feel free to shout them out if there are, I'm happy to move over to the Senate side of things, which is the Wyoming Stable Token Act amendments.
Proceed.
Thank you, Madam Chairman. So this is Senate File 0052. This is the series of amendments that we discussed with the Select Committee on November 20th of last year in their meeting. So to quickly recap, and again, if you're online, the easiest way to access this is to go into the agenda and click on the link where it says SF0052. For those in the room, you have Senate files in front of you. To quickly recap the actual amendments, the first thing we do here is bring our wording around background checks and criminal history checks into accordance with every other agency in the state. So I don't think that's that controversial. And that's the Title VII, the two Title VII pieces. Then we have updates to the powers of the commission. What we did here, what the legislature did here was remove some wording that made it sound kind of like we were going to do an initial coin or initial token offering with an overall number of Wyoming stable tokens to be issued. We've updated this to make it a bit more general and also specify that we can design the supply characteristics for each type and what each type of token is. So if we wanted to, so of course we're obviously endeavoring to issue one type of stable token that will be fully reserved and non-yield bearing to the end user. If we wanted in due time, and we did all of our diligence and wanted to launch a yield bearing stable token hypothetically, wording here would give us the authority to do that. The commission has the rule-making ability and decision and power to do that. At the bottom, this is section E. This just simply says whenever we're about to fully launch the first reserved token, so the first public and live token, if you think about it that way, after we do all of our testing, I will have a report due to the legislature, similar like I did at the beginning of November. And then the big change we're making here is being more explicit about what we're able to avail ourselves of in terms of investments that we can put dollars into that will substantiate the value of the stable token. So initially, all that this said was we would be investing exclusively in United States Treasury bills. We're now looking to update this to say we can invest exclusively in cash, United States Treasury securities with a maturity of 1 year or less, or United States Treasury security repurchase agreements with a term of 1 month or less. And that's going to de-risk a lot of the underlying reserves for us. Obviously, early last year, we had a couple of issues with banks and being too far out on the curve from a maturity perspective. And I'd also like to thank the Treasurer's Office for working with the legislature kind of on the hop to make sure this wording was put forth appropriately. So that's the amendments. I think I added a fiscal note in here. There's no fiscal or personal impact from these changes particularly. And then we have the what's called the digest, essentially the voting record on this. So to give a bit of context on that, these amendments, Senate File 0052, was introduced in the Senate on Monday afternoon and passed the 2/3 majority threshold required in a budget year to pass or to introduce legislation. And we passed with a vote of 23 aye to 8 nay. And the threshold we had to hit was 21, so we were above that. The bill, or the file rather, is sitting with the Senate Minerals Committee, which will be the one to continue workshopping this rather than the broader state Senate. So they meet Monday, Wednesday, and Friday afternoons. I am, again, much like on the House side, monitoring this very closely. And then once we move through the Senate, the House side of the Minerals Committee will then be looking at the file, and they'll kind of bounce back and forth ahead of a formal vote to ratify the final version that both sides of the legislature agree with. So that is what I had on the Stable Token Act amendments side of things. Are there any questions there?
Commissioner Pope?
Dr. Apollo, did any of the nays speak as to the reason? Because this is, to me, just a housekeeping bill.
Through the chair, Commissioner Pope, I would agree with that. It's a little surprising that, we're not trying to pass anything that's net new. We're simply trying to update something. And I don't know why people would push back on, let's say, having our agency in conformance with others on background checks. you know, these are very long meetings. I only saw, the only part that I saw publicized was the vote at the end of the afternoon session. And I am also aware that some people did change ayes to nays. So I don't know what the impetus behind that was, other than something political that I'm not aware of. Again, this is actually my first rodeo with this, so I'm still learning on the fly as well.
Commissioner Pope, I'll try to be graceful here, but I'm sure as you've heard, a lot of bills are failing introduction. A lot of committee bills have failed introduction in both the House and the Senate. So I think I wouldn't take it personal. That's what I would say. My guess is some of the dissent is perhaps, I bet if we were to line it up, it would have been dissent more of the overall project, not of this bill in particular. That's my guess. But again, I think getting it introduced is a tall order this year. So as we know with the 2/3, so.
Thank you, Madam Chair.
If I may, Madam Chairman, one thing I did find interesting is I did see that the unincorporated DAOs legislation that was on the Senate side passed 31-0. So that raised my eyebrow a bit, and I don't know why one would be one way and ours would be another, because if it was the sentiment about general skepticism around crypto, blockchain, digital assets, I would imagine that would impact both. But perhaps, again, I'm missing something. This is all happening kind of day to day, so there's more diligence to be done on my side as well, for sure.
It'll be interesting to see, Anthony, if you do a history into the original act when it was passed for the EAs and As, and to see if anything has shifted in the, in the approach or perspective from the senators to this overall project. I think it'll be interesting just to understand.
Through the chair, absolutely, Commissioner Navarez. I did that very same exercise for the JAC. Again, this is, all coming through on the hop, so still did do that comparison exercise, but I'm happy to do that. Because again, we will be, as we move through these multiple readings, it's going to be the same people looking at the same things over time. So I'll make sure that we're aligned to the extent we need to be aligned. Any other questions on the amendments? Hearing none, Madam Chairman, I am happy to move on to the agency structure memo.
Proceed, please.
Thank you, Madam Chairman. Now, this is, again, where I expect to spend some of our time. We'll see how expeditiously we can move through this, because most of you have had a chance to review it and give me feedback on it, which I've certainly appreciated. And I will first state, before we even dig into this, that this will be considered a living document as we move forward, because there's a number of things to figure out that will all be captured and distilled here. So to quickly preface this, this memo, called the Agency Structure Memo, started with a fairly innocent question from Commissioner Navarez, which is, how do we account for reserves? And now we've done a fairly robust analysis of how multiple different agencies are set up, component units, GASB, and many other things that'll be shown in here. So again, this is a little bit of a hodgepodge of different items, but net, what we're looking to do with this memo is figure out a few things. One is, does the Stable Token Commission need to be considered a component unit for its financial reporting? And then what are the downstream impacts of that, including how we would classify and characterize certain balance sheet or liability line items, how they would resolve to the state's financials, and also if being a component unit would or would not have any impact on perhaps the agencies that we would be working with. So for example, to throw a couple of them out there that we've certainly talked about, A&I, ETS, HRD, to throw a lot of acronyms at you very quickly. So what we're trying to do with this memo is put our thinking forward, and rather than looking for guidance that may candidly not be there, is making some determinations internally and then moving forward until someone tells us that we can't do that. So I'll dig into it. I'll give a quick overview. Well, I guess I gave you the overview. We'll dig into this. We'll go page by page. I'm not going to read it out loud because I think, again, everyone has seen it. To the extent that anyone has questions on the context of a given section, I would encourage you to just shout it out, because otherwise I'm going to keep moving through this so we can keep this expeditious.
Yep.
All right, thank you. So first page is the summary. I think I've pretty much given the context here. Do we need to be a component unit, and what are the knock-on impacts of that? And even if the component unit is not a consideration for those knock-on impacts, we look at them anyway, because we should probably know how we need to structure this thing. So flipping over page 2, which is simply a table of contents. Page 3 is the component unit decision, right? Should the Stable Token Commission be considered a component unit? What follows on page 3 and the first half of page 4 is guidance from GASB, the Generally Accepted Principles for Accounting for Government Entities. We certainly count as that, as a state government. And what GASB proposes is essentially 3 criteria for determining whether you are or are not a component unit. So on page 4, this is the bottom half, that's where we make our preliminary determination. We replay these 3 criteria and say why we think we do or do not meet them. Pardon me. So to level set, in the guidance in GASB talks about separate organizations and primary governments. The thought here is that we would be the separate organization, Wyoming State would be the primary government. So to run through these determinations quickly, the first one is the economic resources received or held by the separate organization are entirely or almost entirely for the direct benefit of the primary government, its component units, or its constituents. And I certainly think that is the case here. The investment earnings that we are generating after they pay for operational expenses, after they contribute to the buffer we're making to make sure we keep the peg of the stable token, it gets returned to the general fund, particularly to the school fund. So that is very directly benefiting the state. I don't think there's much there. But
Madam
Commissioner
Chair?
Pope?
Commissioner Pope?
How does the accounts held in trust for redemption, because predominantly we will be, or the predominant amount of assets that we hold will be secured for the security for redemption. And so, whereas the earnings on that are all of what we are, the only thing we're holding for the benefit of the state. Have you looked at that?
So through the chair, Commissioner Pope, it's a good question. I haven't dug into it with that level of granularity. I think that what that's going to come down to is the definition of economic resources, right? Because if we're holding consumer funds, which will be given back to them, I don't know if that's our economic resource or the state's. However, the funds that we would be able to touch would be the state's, and that would be what gets contributed to the schools over and above that 102% buffer. Does that make sense? I want to make sure I understood the question correctly.
Well, and I'm not 100% sure I understood the question either, but I think to the director's point, those are economic resources. And I looking, and again, I don't want to get too far down in the weeds here, from a very broad perspective, would this project exist but for benefit to the state and her constituents? But maybe I'm going too high.
Madam Chair? Okay, so I think this question will, and I think you answered the question. That my second question is one of those that I usually dislike from them when they come from an attorney, but would you agree that the money held in trust is not, those are not funds that the commission has the authority to use and spend?
Through the chair, Commissioner Pope, it's a very nuanced question because spend, I would say no, but use, I would say yes, because we're taking those dollars and putting them into buy treasury securities. And again, we're getting very semantic, pedantic about the semantics, but I think that's my mental model, right? We could take those dollars and we have to invest them, right?
The other comment I would make as I was reading through this, and you could maybe say this better than I, one of the nuances is generally this component unit conversation is to grab and include something that isn't included. You know, the whole intent is to say, your statements are not complete without this widget. In this scenario, it's included one way or the other. So the analysis is, I don't want to say backwards, but I think some of these things are looking at, do we grab this external thing and bring it under our umbrella? Whereas this, we already know, like, if for some reason we determine it's not a component unit, it's still within the state versus being external to the state. I believe, especially where we have an agency and it's using, but yeah, I'm not sure if I'm verbalizing that well or if that point even matters, but.
Madam Chair? Okay, and I'm doing this in order to set up a basic scenario for probably later on. But does the statute designate those funds held for redemption as a separate trust or held in trust? Not an either or. I'm using those two terms synonymously.
Through the chair, Commissioner Pope, the closest analog I could give you is we do have two separate funds set up in the state for us. So the trust fund is Fund 203, and that is where that segregated bucket of customer funding will go. Now, it may take the form of dollars, it may take the form of securities, but that is its own separate thing that has been already pre-configured. All of our operational funds it's called Fund 204. That is highlighted later in the footnotes here to make sure it's all in one package. And that's where we'd expect, for example, the dollars to come in from the budget bill, should that pass and everything go according to plan. That's where after the 102% reserve is established, the dollars from the trust account that are over and above the 102% and pay for the operational expenses will then come into Fund 204. And we walk through that later in this document as well.
Madam Chair, one more follow-on, and this is more of a comment. It is my understanding, and I believe the statute bears it out, that those funds are designated in statute as held in trust. Okay. Thank you for your patience on that.
I will go ahead and proceed, Madam Moderator.
Yes,
Madam Chairman.
please.
Thank you. So we, again, are returning back to page 4, preliminary determination about the component unit. We've gone through criteria 1 about economic resources that are for the benefit of the government, which we believe this certainly is. The second criteria, top of page 5, is the primary government or its component unit is entitled to or has the ability to otherwise access a majority of the economic resources received or held by the separate organization, which means the Wyoming state government can, I don't know if we want to use the word take our funds, but is entitled to some percentage or all of the money, that would be generating as investment earnings. And I think this pretty much is reinforced by the fact pattern from the previous criteria, which is, well, after we generate a certain amount of investment income, it goes back to the state. And I think perhaps there's an argument to be made here as well that we're also getting our money from the state, our startup operational costs, whatever you want to consider it. We had the initial allocation came from the state, the budget request would come from the state. So I think that creates a loop that meets this criterion. Any questions on that one? Okay. Moving on to the third criteria, the economic resources received or held by an individual organization that the specific primary government or its component units is entitled to or has the ability to otherwise access are significant to that primary government. I think the term significant here is fairly loaded. There's no, as far as I could tell in the GASB statutes, there's no materiality consideration here. We could certainly look to, percentages of revenues, percentages of assets held, but we also won't have that information until we're up and running. So, and I would defer to Madam Chairman and Commissioner Pope here from an audit perspective if this is something that might change over time, but I would certainly expect, just based on the numbers that we're seeing that incumbents are putting up, if we even take a small chunk of the market that, let's say a Circle has, we would be very significant, I would think, on the state's books. Or, not to use startup math, but 1% of the stable token market right now is $1.35 billion. So I would certainly think that would be significant, and that would be from an asset perspective. So I would generally think we will meet this criterion, if not on day one when we first launch, over time. And I will pause there for any thoughts.
And Director, I think, and again, we're all, we haven't had a new component unit since lottery. And no one in my office was in, I shouldn't say that. No one in the accounting division was in their positions when that happened. Where I do think this could be relevant is if we're looking at fiscal year 2024, which will end 6/30/2024, and the stable token, there has only been, $230,000 of expenditures. I don't know if there could be a determination to say that's immaterial. We're not breaking it out until 2025, even though we know it's going to be a component unit. We don't care for financial reporting purposes this year and have a disclosure. And so those are all things we'll explore. However, there will at that point, well, no, not until July. There won't be that 5.8 million sitting in the account. But so that, I think, to your point, there doesn't seem to have been a lot of, we've had some very small component units in the past compared to the state's books, but I think that could potentially play into effect in 2024.
Madam Chair? And
Commissioner?
Director Apollo is, and you are both correct, materiality is, this section or item 3, materiality is an issue in the first year, but one of the things that I've figured out during this process, which I hate to admit, is that the way we treat the commission and the way the accountants treat it, accountants don't really have the final say in this. Just like lawyers, their opinions trump that of accountants. Please, I hate that. But attorneys, their opinion trumps that of accountants. And our treatment operationally doesn't really say anything about how the auditors will end up treating the commission, whether it is fully combined or discretely presented, is a matter of how the auditors want to treat it. We will make a decision, and then they will make a decision on whether or not we are correct in wanting it to be a discretely presented component unit. I think we should be and will be eventually, but I think some of the decisions on how we structure things, it really doesn't matter, especially right now.
No, thank you, Commissioner Pope. And I think that's a really good point to make to streamline our review in this so we don't get caught up. And I think maybe I'll re-say what I think you heard, what I think you're saying is, whether we're a component unit or not shouldn't have any bearing on the decision that on how we think we should best operate, because the statute stands as it is. And if the statute allows us to do things, how we are presented in the financial statements is irrelevant and for that matter, very untimely, right? So I'm just thinking, okay, at the very earliest, we'll know a year from now for sure if MHB agrees with our determination. But if we do go down a path saying this is immaterial for 2024, then it could be 2 years. So I think it's really important to note that determination is of limited importance.
Madam Chairman, if I may, I certainly understand and respect the timeline and how that decision will be made internally. The concern that I would have, and again, I understand that we don't perhaps need to, ring alarms and get this decision made today. But I do think, if I understand correctly, component units typically do have their own audit process, which is going to affect our RFPs.
Yes.
Right, and that's why, in the middle of everything else going on, we're talking about this now, because we need to make sure we're contracting the right parties, because by the time we get funding by July to negotiate with vendors to get them on board and actually build the token with guidance from them, we're going to be at the end of 2020 calendar year 2024, and hopefully getting ready to launch a token. We're going to need to have some idea of who's going to be helping with that. So I just want to make sure that's not a disagreement of the point you made. It's simply framing the onus and the impetus we're putting on this appropriately.
Go for it.
One comment on that as well, not disagreeing at all, but the statute provides for both audit and review services. Review services are a step down from an audit. I believe the proper language in the statute should have been other attest services, but there are two items that need to be audited that we will do. Number one, the overall financial statements, which that's in the statute. The quote unquote review services or other attest services would be the ongoing sufficiency of assets for redemption attestation that can happen in real time, monthly, quarterly, et cetera. But it is provided for in the statute. Whether or not we are a component unit, we will be audited, and we will require attest services as we move along. So yes, component unit designation matters for that, but only in how those audited financial statements and attest services are used at the end of the audit period. Does that make sense? I kind of rambled there. So
No,
I
Commissioner
apologize.
Pope, it does, and no one asked you or me how to write that paragraph, obviously. So, but no, that's a good point. I think it requires a separate audit regardless of component unit status, which would be very awkward if you weren't a component unit. But yeah, and then I think yes, I agree. So,
Yeah, Madam Chairman.
Commissioner Meyer?
I'm looking at 560 indebtedness considerations, and even though we may be a state component, we want to make sure that there's enough flexibility in that definition that will allow us to have debt over that 1% of our assessed valuation. So we want to be real careful when this thing, is born, that we take that into consideration.
And I think, thank you, Commissioner Meyer. I think that is a concern that we should address, not to get too much to the punchline, but I think we're hoping we are not classified as debt.
Right.
For now, I think we will, if you're okay, Commissioner Meyer, I think we'll just continue walking page by page through the memo.
Sure.
That is probably one of the more important things, but it's the last page, I think.
Yeah. All right.
Okay, thank you.
Madam Chairman, that's why I saved the best for last, right? All right, well, thank you for the dialogue and all that. I think, the net is, although the component unit determination from a formal perspective may be something we can kick down the road a bit, we do know we're going to need some audit and attest services out the gate on this. And as Commissioner Pope mentioned, it might look different than what most are used to. The ability to have real-time attestations where you click a button and you can automatically generate a report from a widget that's indexing 15 different blockchains. At the same time, it's getting API information in from multiple different banks. I mean, that's very powerful stuff. So I'm excited to see what that looks like, and we'll keep rocking and rolling with this. So the next section, the bottom of page 5, this is the impact of being a component unit and some of the determinations that may or may not be related to that. I think just to spoil things, I don't think much of this is related to determination, but these are all things we were looking at as a result, and we want to make sure we capture them because they are important for us to discuss and determine sooner rather than later. So that might be, again, financial reporting. We'll touch on that in more detail. Support agencies and how we're able to leverage their assistance. We define support agencies here as ETS, which is technology, administration information, the Attorney General's office, et cetera. Other impacts might be on statutory changes, and we'll get to that momentarily, and then funding as well. So as I was doing a lot of research for this, I noticed that, for example, the Lottery Commission was actually funded privately through a loan. And I want to call out specifically here that we are not looking to do that. I mean, we did get a question at JAC about public and private partnerships, and I answered with a pretty emphatic no on that. So I want to make sure we've captured that here as well. In terms of next steps, Madam Chairman, this is kind of back to you. I think we're on the same page here based on the feedback you provided, but your office, along with oversight from MHP, will make that internal determination around the component unit status. When the time is right, I've called out dates here. This is not expected to happen for about a year and change. But I did note that you are meeting with them soon and can bring up this commission as a whole. And if I could be helpful in any way, shape, or form to that discussion, please let me know. I'm happy to provide whatever.
Great. Nope, thanks for tweaking that, and that all looks accurate.
Thank you. I'm going to keep rocking and rolling. For example, just the questions that came up along the way. Does becoming a component unit have any impact on state sovereignty or instrumentality? Answer there is no. We don't expect there to be any impact there. What are some of the other component units that we looked at as we're going through this exercise? The University of Wyoming, the Business Council, the Community Development Authority, WYDOT, the Energy Authority, and the Lottery Corporation. And they all have varied levels of independence and reliance on support agencies and support services in the state, which again will help kind of inform our mental model as we go forward and kind of figure out what the best path for us looks like. Does Wyoming state constitution or statutes provide any context around component units? No, it's very much a GASB domestic accounting concept. And what level of operational independence is conveyed by component user designation? Nothing really. It's just something that happens to be more, the organizations by being components unit are kind of de facto arm's length from normal government organizations. So they end up having different service outlays. And that's pretty much it. There's not necessarily a relationship between the two. Before we hop on to the next section, Commissioner Navas, you have a question?
Yeah, thank you, Anthony. We have discussed this separately, but I would like to bring it to the commission's, broader commission's knowledge and discussion, that as we continue looking specifically at point 1.2, state sovereignty and in the impact of any classification that this token could have by different agencies at the federal government level, that we continue working with the Attorney General's office with the support of outside counsel that has been retained to aid the Attorney General's office in its review, and continue informing the Commission of any anticipated changes to the analysis or any impact that this could have on the launch of the token.
Through the chair, thank you, Commissioner Navas, for putting a fine point on that, in agreement on there. And before, again, any other questions before I move on to the budget section or a component unit budget section? Feel free to shout them out, but this is going to be, I think, a very quick section because a lot of this is just recapping what we already talked about in the monthly budget summary, as well as the review of the budget bill. So again, we had our initial allocation of $500K. We have spent about 30 and change% of that. We're only expected to spend 45% initial allocation. And then we talk about our budget request that we went through with the JAC. We talk about where the budget bill is regarding other funds versus the general fund. And we also include a section here in 2.4 about the unencumbered and unobligated funds that would from the initial allocation that would be contributed to the budget request. Again, so really not, end of the day, not much here about the component unit piece of it. But again, we wanted to capture this in one place because it was part of the kind of discussion we were having around where all this money is moving to and from and how it might be reflected at the end of the day. So to quickly keep on moving here, section 2.5 is the flow of funds and repayment of capital. Because as Commissioner Pope highlighted a few moments ago, there is guidance in the statute on how the dollars should be moving, but I wanted to kind of make it a little less inscrutable and put it into a little easier to read format, right? So we talk about in section 40-31-106 of the Act, this is where the trust account is created, and it's specified that the investment earnings that are generated will be handled as they are in section B here. And then we have the Wyoming Stable Token Administrative Account, again, that's Fund 204, is created, where we have this kind of waterfall of where funds go, right? So we pay for operational costs first, then we have a savings bucket that looks a lot like retained earnings, and then the remainder is distributed to the school foundation program account. So if you flip over from page 9 to page 10, this is where I've simply kind of written that flow out in less legalese. So dollars come from customers. Those dollars are held in Fund 203. The treasurer's office or an external third party that we engage will invest some portion of those dollars into treasuries and avail ourselves of the repo market. Those investments generate investment earnings, which are held in Fund 103 until we hit that 102% threshold of the notional value of tokens outstanding. After we're over that threshold of 102, funds will be migrated from, or dollars or capital, whatever we're going to call it, will be migrated from Fund 203 to Fund 204. And this is where I want to highlight a couple of variables here. Again, don't think we need to make a determination on these now, but these are things we need to be thinking about proactively, which is how much can we move in any given transaction, whether this should be something that's done on an ad hoc basis or a recurring basis. Because, for example, we know that deposits into the school foundation account are quarterly. There's no specificity here about the rollover between our own funds. And then whether we want to maintain additional funds in that kind of buffer. We know that several meetings ago, the governor expressed his desire to see a buffer even beyond 103%. So these are all things to consider and would be deferred to the commission and its rulemaking authority to figure these out. But these are things I would expect to see in a policy at some point in the future. And that's the reserve side of things. Once the dollars are in Fund 204, we again have that waterfall where the first thing is we pay for operational costs. And because the statute is, I'm gonna say, somewhat silent on the repayment of the initial allocation, it says we have to do it in section 4, it doesn't say how. We should put some thinking around that as well. What I think we should look at is classifying both the initial allocation of $500K, however much we spend of it, and that budget request of up to $5.8 million should be considered operational costs. If the expectation is Fund 204, the capital that comes in there is used for us to pay salaries, to pay vendors, to pay for whatever OpEx we have. Well, the initial allocation, the budget request, in my personal opinion, is being used for very much the same thing until we establish those investment earnings. So rather than doing something like structuring a loan, which would be, I think, a different can of worms that I probably don't want to, I would suggest the commission doesn't want to open, we may want to consider that to be operational expenses or operational costs. And that would say, so essentially how that would work in effect, once we start generating investment income that starts coming into Fund 204, we would be paying back the general fund first before we do anything else. And the anything else would be the rest of that waterfall. So that second bucket was, we could retain some amount of funds, which would be like retained earnings or a savings account. I think that the commission, I would suggest at some point in due time, has a policy here about how much can be maintained in that bucket, because whatever is held there is being withheld functionally from the school foundation. So I think it would behoove us to think proactively about how many dollars we're going to keep at any given time. Are we going to have R&D buckets where we say we want to launch, a new type of stable token, that one that bears, that is yield bearing, and we should perhaps save some extra for that? Do we want to be just completely open and flexible with it, and we just make some determination of how much goes into the school foundation on a quarterly basis? Again, not looking for a decision today, but these are things that I think we should be thinking about, and I think pulling the dialogue out of the statute and making it a bit more conversant here is going to help us shine light on that.
Commissioner Pope?
Director Apollo, would that be part of the function, once we start rulemaking? Would those rules be defined at that point?
Through the chair, Commissioner Pope, that would depend on how you define rules, right? I think perhaps there's a broader rules subcommittee, and working groups therein could be split up between things like looking at accounting rules, like the AICPA and FASB guidance that came up in December, versus us creating our own rules that might, kind of internally, a policy-making group for the commission. So I think that might be two different things, but fall under this, two different working groups that fall under the same bucket.
And Director, it seems like that decision would be hard to make also until we have a little bit better understanding of what our volume and inflows might be. It might take us very little or very long to pay that off, so.
Absolutely, Madam Chairman. So again, just putting the bug in your ear, nothing we need to do right now. But one other thing I'd mention is, to the extent that there is other guidance, Commissioner Navas, not to put you on the spot, but one of the other things we talk about somewhere in this document is where we want to rely on existing and outstanding guidance from the government or other entities. One of those might be New York DFS. I don't know if anything in their stable token framework is even roughly analogous to this, but I figured I'd ask.
No, what New York DFS has issued reflects what the private sector is doing today with the regulated issuers that are under their purview. And actually the list that they have of assets that can back that token is a little bit more permissive than what we are looking to do, or the state of being more conservative, which is, to start with, I think is a prudent approach to take. They do speak, David, to your point about the separate accounts and creating operational controls that are different for the accounts, such that not the same individuals or the same controls are in place to manage, corporate accounts versus reserve accounts, auditability of those on a monthly basis and the like. So today, from a regulator, either the state or federal level, New York DFS is the one that has been the most descriptive on its guidance around stablecoin reserve management. But obviously, the state of Wyoming can choose a more conservative approach, and relying also on just guidance that we may have from other industries on how to do best practices, banking, money transmission, securities, and the like.
Proceed.
Thank you, Madam Chairman. Again, if there's any questions from anyone on the line, feel free to shout them out. Otherwise, we'll keep moving on to the next section, which is support agencies and statutes. So to reiterate, if we do happen to be a component unit, we don't necessarily lose or maintain access to any of the support services we're already availing ourselves of. However, this led us into a bit of an exercise around where we can capture the most operational efficiency. There's certainly a timeliness element here too, but the concern is we are going to be a very bespoke agency doing a lot of work that no one else in the state government particularly does. I think anyone else is trying to figure out how to reserve, or how to account for stable tokens on their balance sheet. So things might look a little different for us. And I want to put some suggestions down in section 3.2 on page 11 about where we may be availing ourselves fully, partially, or not at all of some agencies. I don't think there's anyone we are not availing ourselves of at all, but what I proposed here is a split of where I think we could be effective maintaining some of the services we already utilize, and where we could gain some efficiencies by perhaps operating a little bit independently in other places. And then at the end of this, I'll point to a couple pieces in existing statute for the other component units, other agencies that have these specific cards out at the statutory level. So, for example, we have the State Auditor's Office. Would be great to make, well, first of all, we have to make sure we get you the consolidated numbers at the end of the year, right? So those will come your way. But it would also be great to utilize the payroll services that are offered here, right? I don't see a need for us to set up our own payroll or our own benefits and all of that. However, after talking to some of the folks in A&I regarding the accounting system, their suggestion, quite strongly, was that we should look into setting up our own accounting system. Just because, again, it's not clear in our monthly budget summaries where, $1 billion of tokens would fit in on that. So we may need to adopt our own system. And again, if we want to make these decisions sooner rather than later, that's going to help with the planning for both expenses and how to operationalize and roll those things out. Moving on, State Treasurer's Office is, again, perhaps a partial reliance. We certainly want to work with the Treasurer's Office on our financials, our revenue projections, interpreting what the interest rate might look like over due time, the blend of cash versus treasuries. And I want to thank them again for all their assistance to date on this document and beyond. There is one TBD in here, which is whether they would work on the custody of fiat and securities themselves, or again, we're going to outsource that function. That's all still up for discussion, but that would be the Treasurer's Office side of things. A&I and the Human Resources Department, which I've kind of combined to one, again, would be great to rely on them for benefits, retirement plans, which actually, sorry for a quick update here, we'll probably deep six retirement plans because as AWEC contractors, we're not on the state's retirement plan anyway. So we don't have that now, and if we keep that configuration of headcount, we wouldn't have it later. So, but benefits and office space would sure be fantastic. Hopefully have a couple more people in the Haunted Mansion to work with. But perhaps from an independence perspective, procurement, hiring, and compensation classification, being independent in that capacity would give us some great efficiencies, particularly around procurement. The stapling of all these pieces together is going to be cumbersome. There's no question about it. Especially if multiple RFPs with multiple respondents, multiple oral interviews that need to be attended by the same evaluation committee of multiple people. We really multiply that effort out intensely when we do the RFP process. Now, I don't think we're going to necessarily divert from the RFPs we've been talking about, and that's kind of the next item on the agenda once we get through this. But going forward, it is possible to look like other agencies who are also component units who have their own statutory carves out to do their own bidding processes. For example, the Energy Authority, I know, does them in a public format, but they don't use public purchase. They don't go through A&I. They have their own setup and best practices for it. And I think that in the future, where we need to bolt on different pieces to the stable token, whether that's creating a new widget that would help us onboard a bunch of resellers, for example, we wouldn't want to have to go through a months-long RFP process. We just want to call, pick up the phone and say, hey, we want to bolt this on to the existing offering. How do we do that? And I think that's an important one. And I would argue the same would be said for the personnel onboarding process. To speak quite candidly, the classifications for state employees are probably not where they should be from a compensation level. We ran into this during the JAC process, preparing our financials, especially with roles we call out in our business plan, like having a chief information security officer or chief risk officer. These are not, having a blockchain-based CISO is not something that fits nicely into the state's grading rubric for compensation. So I think if we don't avail ourselves a little bit of independence in that capacity, we might be getting stuck. I want to be proactive about that as well. So that's the A&I and HR side. Moving on to enterprise technology services, I want to make sure we're still staying kind of in network here, laptops, software, VPNs and Wi-Fi and all of that. However, from independence perspective, we do need to be fully independent on the blockchain side of things. Again, with all due candor, I am not aware of any resources or branches of ETS that have operational blockchain experience or have any of it in practice today. So I don't know why, I don't want to be beholden to a tech sector where we're not really touching it at all. Although, again, I'm very open to have the conversation with the ETS team if they have a different opinion on this. But to the extent that this is decentralized technology with open source code, I'm not really sure what the oversight would even be. And then final piece on here in terms of support structure would be the Attorney General's office. And we already have a statutory reliance on them, at least through the launch of the first stable token that's fully reserved. And I would certainly like to firm that up on the long term, but I'll let Devin maybe opine on that at some point in the future. So just to quickly, that's the support agencies. I did want to walk through that with some detail because that's where a lot of moving pieces we have. Let me just actually finish out on page 12 here. All I'm simply doing in section 3.3 is pointing out where other agencies have a statutory carve out for these permissions. So for example, the Lottery Commission has in Title IX, Section 7-125B, in any bidding process, the corporation may administer its own bidding and procurement, or may utilize the services of the Department of Administration and Information or other state agency or subdivision thereof. So it sounds like they can kind of have it whichever way they want it, and that lets them move quickly. I would argue the commission should pursue the same thing for itself. And the rest of this flows other examples. But I'll, again, pause there now that we're through that support section.
Director, I think that makes a lot of sense in terms of procurement. And adding something like that into the statute doesn't hurt us ever. If we decided that A&I procurement is the best way to go and is the most efficient, that is still available to us. So I agree with your assessment. Does anybody else have any other thoughts? I think just having it free up where we get to just buy whatever we want, however, is not a realistic expectation. That something like this, where we have to have our own policies and procedures, which is also work, and will be a production. But I don't think similar language could hurt us, I guess is my point. Any other comments?
Madam Chairman, if I can make just 2 quick points. One is absolutely, if we go this direction and have this, I would still, however it manifests, push for maximal transparency as we can have it. I mean, all the tech we're building is transparent, all the work we're doing is transparent. I would say we would keep that consistent. And then secondly, I just want to quickly call out, I kind of glossed over the paragraph at the top of section 3.3. I don't think this is anything that we're to walk into the legislature that's ongoing right now and start making changes that are going to require 2/3 majority. So I do call out here, this would be a 2025 issue for us to deal with anyway. And we would kind of have to move forward with the RFP process as currently planned for the initial build out. But just want to make those 2 points and then hear the rest of the feedback.
And that's a very good call out, Anthony, and I agree with your statement, Chrissy, about this is a good thing to have. To Anthony's point, transparency is critical, and we will always be working with that in mind. The other point that is obviously clear is that this process that we're undertaking and the product that this commission is working to create is something that is, there's no precedent anywhere for. So when the commission works with certain areas of the state that are used to a process related to purchases of certain services or products that are recurrent to the state, and then we introduce something that is very bespoke, there has been a mismatch in some of the expectations, which has caused potential delays or just having to go through it with a little bit more detail. So I believe that this is something that we should be working towards with the goal of always maximum transparency, respective of the process that we choose to select.
Commissioner?
Thank you, Madam Chair. Absolutely agree. And just a couple of kind of final comments on that. First off, there's a very valid reason that the state has its procurement rules and going through the initial phases of the development of the stable token. There is no reason. It helps to be supported by those rules. And even if we move to a point where we create our own procurement rules, there is no way we would ever still be able to violate state statute or law in the creation of those rules. So yes, it will remain transparent. It will remain as rule-based and as fair as possible. It may just speed up the process. That's what I think what I'm hearing.
Yeah, I think that's accurate. There's certainly no intent to not give everyone their fair shake. And I think you make a good point in where we are right now with one employee, probably the more we can access and utilize central procurement services, the better. But it is a long and painful process by design. It is supposed to make sure we give everyone a fair chance. But to your point, our rules would have to be not entirely dissimilar.
Excellent. Thank you all for the questions, Madam Chairman. Anyone on the line have any questions before we move on? Hearing none, I'll move forward into section 4, page 13. This is financial reporting for the agency. Again, we can skip through, we can move this pretty quickly because again, these are probably a couple of decisions we could punt on for a bit until we do have auditors and assurance to go through. But, again, wanted to make sure that we wrapped our minds around if we are or will be a component unit, how reporting will actually work between the different parties we need to triage with, integrate with, and move forward from there. And then what, of course, we have due to the state auditor's office every year. So the belief is that we'll have, on an annual basis, to provide a statement of net position, which is analogous to a balance sheet, a statement of activities, which is analogous to a P&L or an income statement, and then a statement of cash flows. The state government has a June 30th year end, so reports will be dated as such. There is a question I think I left in here for you, Madam Chairman, which is for agencies that report to your office, how long after that June 30th deadline do they have to provide financial information?
That's a great question. I mean, to be included, we need them by, it's tight, typically mid-November to very early December. And that's when we need an audited financial statement to drop into the state's financial statements. And I know that maybe doesn't seem tight, but it often is, especially with larger entities.
Madam Chair? Go ahead. Okay, so going back to 4.1, the financial information. For various reasons, I believe, and as insinuated earlier, that the trust should be as independent of an entity itself as possible. And I believe there should be separate reporting for the trust. And so I'm going to make a kind of a statement of opinion here that that should be added to the financial information that the STC reports.
I wonder do any of the other component units have a similar, the lottery perhaps?
Madam Chair, the lottery, I believe, has a separate account that is designated and splits somehow between winnings and then what then goes operationally, and then the remainder goes back to the state. Similar in a lot of concept to what we're doing. I don't know, and I don't believe they operate that as a separate trust, but I believe in our case, we need to, because the assets and the liabilities of that trust are specifically designated for redemption, with the overage from investment earnings coming back to the ordering that Director Apollo placed in here. And again, I think that, that the more we can segregate that trust, the easier it is to justify some of the other kind of legal questions that are surrounding this.
Something that I'm wondering about, and I'll say it out loud, is, I mean, when does WST need its first audit? You know, is that June 30th, 2024? I mean, and I guess I don't know the answer to that.
If I may, Madam Chairman, I would assume it would be June 30th of 2025, right? Because if we don't have any capital to build the product by the June 30th of 2024, so we get the money, we get funds on July 1st, we wouldn't necessarily, I mean, we may have to do an audit, but it would be minimal activity over what's presented in the budget. And that would, I believe, would just kind of flow through a normal state agency process, not to worry about different external auditors and attestations and all of that, that your office would rely on once we are a component unit. However, if we launch a token at the end of this calendar year by June 30th, 2025, then we would probably need to look a lot different. So we may have a calendar year consideration within the middle of a fiscal year.
Yeah. And no,
Oh, sorry, go ahead.
No, go ahead.
The question is, again, on the state side, it would be materiality. That's the concept, and honestly, right now, what will be a component unit is right now immaterial. And then on our side, it won't need an audit until there are, until there are tokens to audit and a fund balance, a trust balance to audit.
Okay, and I'll start having those conversations with the external auditors as well, just so we make sure.
And one more consideration through the chair, to Commissioner Pope's comment about keeping that trust as segregated as possible. I don't know if this would be wise, but if we do want to keep them rather separate, perhaps it could, in some scenario, make sense to have an external auditor engaged by the Stable Token Commission solely for the trust to keep our costs down, and then continue relying on the existing accounting for our operational expenses in Fund 204 and not rock the boat too much on that either. We're not going to be a team of 100 people with crazy startup expenses and globe trotting around the world. It's going to be mostly people in Wyoming working on this, and small headcount relying on external vendors. That might be a consideration too.
Okay.
Yeah, and David, as a reminder, there are attestations and there are audits of the reserves, right? So the tokens are attested to on a monthly basis, and it's mostly to acknowledge that there is the same amount of money or greater in the reserve account as there are tokens in circulation. And that is, you can see that at any time of the day as you look into a blockchain. However, there is a monthly attestation by the auditor that is done to meet that threshold, and then at the end of the year, there will be the formal audit of the accounts. That's what the private industry has been doing.
If I may put through the chair, even finer point on that, looking at what Circle does, and Paxos might do the same, but definitely Circle. Circle does an internal weekly review that they put out. They do a monthly attestation. It is actually not clear to me if they do an annual audit. But I think but they don't need to resolve, for example, the state's financials, which we would, right? So we may have kind of the best of all worlds and all the work to do. Then again, from a tech perspective, we've seen tech at this point where we could do real-time attestations, and that might kind of change how we think about things. So everything still is very much on the table for how we move forward with this.
All right, proceed, please.
Thank you, Madam Chairman. Moving on to, we're about halfway through page 13. I think all we're saying here is where our financial information ends up. Obviously, we'll have our own statements, but then we end up on the state's ACFR, which I thought it was slick and had the acronym down there. I know it stands for financial report.
Annual Comprehensive Financial Report.
Thank you, Madam Chairman. So we'll resolve there at the end of the day. And one of the things to note in that ACFR is how component units, again, should we be one, and we're making some preliminary determinations here, and that's all these are, of where we will end up at the end of the day, is whether we are a blended or a discrete component unit, or in a major or non-major component unit. I think the way it's proposed here, we would most likely be a discrete component unit, which is, I think, how most component units are structured per the GASB guidance. Having a blended component unit is fairly rare, and the state certainly doesn't have any. So there's that, and then the non-major component unit is based on the significance of the component unit. And again, to at least start, I think we'll have minimal activity when we first launch, so we'll probably be non-major for the foreseeable future. Again, assuming we are a component unit, and that's where we'll net out. And then we talk a little bit about who is doing the review. This dovetails off what Commissioner Naves was just saying. We did in our budget put some funding in for a CFO type of role who could help us with weekly reviews. We would rely on a third party for monthly attestations, or I say assurance reports here, and then we would need to go through an audit with CPAs that are validated through the AICPA. And then the last section here is getting into a bit more depth and nuance about actual accounting treatment for certain line items. But I'll pause there before we dive into that, see if there's any questions either in the room or on the line about section 4. Hearing none, I will go ahead and continue. This is now looking at both the token itself and the substantiated reserves and where they would fall on the balance sheet or income statement. Because again, that's not something that Wyoming has really had to worry about to date. So in terms of what the token is, we describe that. We would be very specific. This is a digital asset. It's intended to function as a stable store of value and a medium of efficient payment and change, similar to a debit card or a gift card. And this is, I think, part of the argument against what we're building being considered debt. And then we kind of hand wave any other future iterations of a Wyoming token that may come up in the future. We'll cross that bridge when we get there. In terms of the reserves, these are the dollars that come in from customers that we then keep some portion of in dollars and then use to buy U.S. treasuries. And we have the statutory wording here, as well as the repos. And then we ask the question of what guidance dictates how stable tokens, their underlying reserves should be reported. And this is where we get into the fact that there really are no great frameworks that are applicable here. We need to look at best practices. We need to look at guidance that's coming out in real time. We've already talked at length about the AICPA and FASB. We did bring up a few minutes ago about New York Department of Financial Services, both of which are called out here. So some of this is going to be following industry trends rather than concrete guidance on how things are treated. So in terms of how we should be reporting this on our financials, the thought is that cash that we're taking in for, as part of the reserves that we're taking in trust would be considered cash and cash equivalents segregated for the benefit of customers and WIST holders. This would be a distinct line item from cash and cash equivalents. So Commissioner Pope, this speaks to your point from earlier. I don't think I made it as eloquently here as you did a few moments ago, but this is the separation between what's in the trust and what's in our operating account. And perhaps those can be two different financial statements in due time. Treasuries that we're taking in or we're purchasing with those dollars would be recorded as available for sale treasury securities segregated for the benefit of WIST holders at fair value. And those two things would show up on the statement of net position again, analogous to a balance sheet. On the liability side, we would expect customer deposits to be recorded as deposits from customers and WIST holders. I would make the suggestion, and perhaps the name reserve requirement here is, maybe it's good, maybe there's a better suggestion, but I think we want to call out that dollar amount or that value amount over and above 102%. We should probably have that in a separate bucket so that when we need to move that money around, we're not disturbing the other line items on the liability side. And then any funds over and above that reserve requirement, which are expected to be distributed to the general fund on a quarterly basis, would be recorded as an obligation to the general fund. And perhaps that bucket, going through what we now have with the budget bill, would be broader and also include the repayment to of the initial allocation and the budget request. I did want to pause here. There's a question that Jeff brought up that I thought was quite important on this. On the liability side of the statement of net provision, customer deposits will be recorded as deposits from customers and WYST holders. Very much, that wording in title is very much leveraged from existing financial reports out there from stable token issuers. Commissioner Wallace's point was taking in customer deposits certainly looks like a bank activity. So we should probably do some thinking about that. And Commissioner Wallace, if you wanted to make a statement there, my Occam's razor is we're doing this as a state, we should be protected by instrumentality. But I want to make sure we give this the deference we should.
I don't know as though I really have anything more to add than that, but I do think if we're talking about holding customer deposits, it's certainly sounding a lot more like a bank activity. And so I think we need to make sure we address whether we're actually acting as a bank in this manner. And I guess while I got the microphone here, you had mentioned the 102% reserve. Is that a statutory requirement, or is that something that we can modify in the rules? Because I think there's been some discussion about maybe increasing that 102% a little bit. So I guess I just want to make sure if that's statutory and we're required to only keep the 102%, or will we by rule be able to adjust that number?
So through the chair, thank you for the question, Commissioner Wallace. It is a statutory requirement. This is, I believe, the reference is somewhere in here from a while back, but I believe it's section 105C. It's kind of a waterfall of where the funds go. So when we're earning investment income on the underlying reserves, those go into the trust account. And we do have a statutory in section, it's 106B. That's where we have the statutory requirement before we do anything else with the funds to establish that 102% reserves. That's 2% over and above what we're holding at any given time. You are correct that the governor several meetings ago mentioned wanting to see a higher number. I would probably, this is my own personal suggestion here, and I would love dialogue from the commission. I would personally suggest not to change that number at the statutory level, because if we end up in a very low or negative interest rate environment, it's going to be difficult for us to get there if we're not already there. However, I would be very open to an internal policy that said based on prevailing interest rates, based on we expect this many redemptions to come in the near future, and we need to have some extra buffer to make sure we don't have a depegging event. I'd be very open to having an internal policy within the commission that would put some points on top of that, but I would love to open up the dialogue because that's just my personal opinion.
Commissioner.
Thanks for those observations, Jeff. Okay, so as accountants, we can be a little bit creative and create a secondary reserve that can be considered on one side a possible operational expense for a reserve for market value fluctuations or things like that. I don't believe the statute prohibits that. And so I think that's the way I would go, is just adding a rule or creating a rule that adds a buffer zone, and then leaving the statute in place unless it's just absolutely required that we change that. As to the bank issue, I think that is, those are considerations that we have to have. Are these funds on deposit, or are these funds that are used for an electronic funds transfer service or something like that? I would not call it customer deposits on hand, but I also know that names don't really matter. It's the legal interpretation of those names. And I would suggest we are also not acting as a bank, because we are not, because those funds are actually in trust and can't be used for any other purpose. So, I mean, there's lots to consider, and eventually, like I said, it's attorneys that, and their interpretations that matter, not my accountant interpretation, but that's my take on it.
And to further on the point, David, that you just made in response to Jeff's about the term deposit, and whether that would implicate a banking activity. Obviously, the word deposit can be used in different scenarios, right? Whether the underlying activity is a banking activity is what would, determine the definition of that word deposit in that specific instance. We should have obviously consultation with the Attorney General's office in support with outside counsel to understand whether the use of that term would have any implication on the banking laws. However, I think it's a word, not necessarily what the activity that is undertaken with that, in taking those monies from the holder, from the token holder, and what it is that the token holder can do vis-a-vis that asset, right? If the cash is taken for the simple purpose of redemption, furthermore, there's no interest earned on that cash, I think the definition of the term deposit would be very different than what you see in banking terms, but something obviously that we should see consultation from legal counsel to ensure that we're proceeding in the right direction.
And going back to the reserves, I agree that maybe we can get creative. It does have to be transferred out of the trust account. So any secondary reserve would have to be held within the admin account to give us a little more flexibility, but I think those are all things that could be addressed.
Excellent. Thank you, Madam Chairman, and thank you to the commission for all the commentary. If there's anything else, I'm all ears, but otherwise I'll keep moving through this.
Okay, proceed, please.
We are now at the bottom of page 16 on the revenues side of things. Interest earned on U.S. Treasury securities held will be recorded as reserve interest income. On the expense side, interest earned, which may be due to external third parties as part of a cost-sharing agreement, should be recorded as reserve income sharing and transaction costs. So the thought here is we're going to launch this thing. We'll hopefully have some early success. When we want to scale it, we may have to tag in third parties to accomplish that, whether that's other centralized exchanges, whether that's market makers. We have talked about in the business plan previously using profit sharing as a way to incentivize other organizations to kind of help us circulate the stable token. They may have some percentage of reserve income due to them. So we've called out a line item for that too. Section 5.5, how do we end up report on the state's financials? I'm going to put a kind of an asterisk on this section. I think this one was one, Madam Chairman, we needed to kind of, you've tasked me to go through and revise. I think there's certain things here around netting activities, which may or may not be accurate. So I think we probably just skip this and revisit this once I have a bit better context on my side. And then the last piece here is going back to Commissioner Meyer's concern from earlier, the indebtedness consideration. So there are several sections in the Wyoming State Constitution, particularly in Article 16, which limits the amount of debt the state is able to create and take on. For example, cannot exceed 1% of the assessed value of the taxable property in the state as shown by the last general assessment for taxation. Again, I'm not sure what that is. That number is at the top of my head. Not sure how stable token volumes would compare to that, until we get that live. I think the bigger concern here is whether any piece of what we're doing is even considered debt and not just a liability on the statement of net position. So again, I'm happy to open it up to that, open up the conversation, but I don't particularly have any reason to believe specifically this would constitute debt.
And Director, I tend to agree with that, and I think we need to talk to some lawyers and accountants to make sure we aren't thinking about that incorrectly. I did go down a rabbit hole, and total assessed evaluation is about 36 billion. And going up quickly. So, for what it's worth. I would note, and well, I guess I will note, I want to really reiterate that I don't think this qualifies as debt, that there's also, with some of the other component units, explicit exclusions in statute, removing those. For example, WCDA has a substantial amount of debt. And also, but also there's some specific exclusions to that constitutional calculation. Whether those statutory exclusions are constitutional or not, I don't know, but hopefully we just stick with the this isn't debt and we don't have to go into that.
Madam Chair,
Chairman or Commissioner?
Ooh, we got a promotion.
There.
Director Apollo, does the statute, the commission statute, does it specifically say anywhere that the state is not liable for any excess liabilities or redemptions on the Wyoming stable token side?
Through the chair, Commissioner Pope, just to make sure I'm clear on the question, is it that from the statutory
Oh, I
perspective?
think I can
It does.
clarify.
Yeah.
I'm getting to the, just in a roundabout way, saying that our statute specifically says that the state carries no liability for redemptions or, and does not incorporate any of the stable tokens liabilities into the state's liabilities. It specifically speaks to that. So if the state can't be looked to fulfill any redemptions, then I don't believe that those liabilities should carry over to the state in anything but a net manner.
And it does explicitly state that.
Of course, the
You-
attorneys will have to
Yeah.
be the final word on that, but I believe that was the intent of that paragraph or those lines, was to make sure that it's not part of the state's debt structure.
Great.
Wonderful job.
No, Director, this is a lot to unpack and it's a lot of information, but I think it at least is a really good start to help us compartmentalize and triage a little bit decisions that we need to make sooner and decisions that we don't need to lose sleep over right now. So I'm assuming as we move forward, you'll continue to tweak this. As you said, it's a living document. And we can, what do you need from commission members? Just further review on this updated version, if we haven't provided it already?
I think, thank you, Madam Chairman, and thank you for everyone's patience in reviewing this. I know it was kind of hopping all over the place. And I promised the governor after, I think, the second meeting we had where I put that financial policy forward, that I wouldn't try to jam 18 things into one memo anymore. But I waited until he wasn't sharing today to
wasn't
get it
here,
out there,
yeah.
right? So, well, thank you. So I don't think there's any specific next steps on this, other than I have some just general loose ends to follow up on. I think we should be trying to figure out maybe where external counsel or additional conversations with the AGs can help us if we need to think about reaching out to other people. Because we have time for this, for a lot of this, but it also, I don't want things to come as a surprise to us, especially if, we need to essentially start getting ready now for, a legislative session next year. I want to be prepared, and if we have to make statutory changes to make sure we are very specific about where we're resolving or how we need to operate, no alarms and no surprises, right? So leave this with me for now. I'll follow up with the commissioners and other parties as need to, and we'll keep looping people in on it.
Excellent.
Madam Chair,
Commissioner?
may I put a little bit of an end note on this?
Absolutely.
As far as the structure of the commission, one of the things I would really like to highlight is that we are entering a market that requires and demands speed and flexibility. Oftentimes, speed and flexibility that a governmental unit cannot match. And that is why one of the things I believe is that we need to have the maximum amount of autonomy over what we do, just so that decisions can be made quicker, actions can be taken on a higher level and quicker basis, and that requires that operational autonomy. And so I think that this document that Director Apollo has created somewhat paves the way for that. And I believe the statute in itself paves the way for that type of creation of speed and flexibility. We have to be more entrepreneurial than a government entity normally is. And therefore, wherever we see an opportunity to segregate ourselves and provide for our own decision-making capability, I think we should take those opportunities.
Commissioner, I think that's a great point, and I sort of want to ask a question. I mean, and I say this hesitantly, but, you know, we have a bill before the legislature right now, which is moving. I think after this conversation, what jumped out at me is two priorities in terms to being able to be more nimble yet transparent. Those are procurement, personnel. Personnel might be a little less important since you're all AWACS, so I don't know how, but I mean, I think they still have to try to fit into the HR, but am I accurate to say that those are sort of the two triage items that do take statutory change? Am I understanding that right?
First time I was quiet today. Madam Chairman, that's a good question. I think those would certainly be the priorities. You know, I don't know if those are things that we can get done. If the implication is we can get that perhaps done on a bill that's actively being worked, and we're just saying stick these two phrases in, I'm not sure how that happens. I would need a little bit of guidance. Of course, I can't lobby anybody to make changes. I'm very cognizant of certain parameters. But if that was to get done by March 8th, I would certainly say our RFP process would look a lot different.
Okay, and no, thanks, Director. I just wanted to say that out loud, and I'm going back to page 11 of the memo, which was maybe the most helpful for me. When I look at some of the other considerations, a lot of them are not necessarily statutory. For example, ETS, I mean, honestly, the way you've described ETS here and the independence desired, that's actually how most state agencies operate. You know, when it comes to getting into anything really, really specific or really unique, most agencies have their own component for that. So I just wanted to say that out loud. And again, I would not be optimistic to necessarily muddy up the bill that's moving now, but you never know if there's an opportunity, and I just wanted to say those things out loud. So if any commissioners had major concerns with those, again, knowing that it will likely be next year, but you know, it's session, anything can happen.
Madam Chair,
Commissioner?
a couple of just comments on that. I don't believe it's gone before committee yet.
Correct.
And so there could be an opportunity there. It's just figuring out how to approach that. And then the second thing is that you mentioned that the employees will all be AWACS. I believe that's the acronym, correct? And eventually, so this stuff wouldn't have to be approached right now or thought about at this point. The Lottery Commission has their own benefits program. And I believe that employees within the Stable Token Commission may eventually want benefits. So, you know, it's something where that doesn't speak to speed or flexibility or any of my priorities with this. But when you brought it up, my first thought was, I think that might not be a bad thing to offer at some point, just not now.
And on that note, I think, yeah, and again, it's unusual that we're going through this endeavor when there's a bill running, you know, right now. So I know this is a little clunky. I think particularly the procurement one is a possibility. Personnel, I think back to, and again, I don't mean to talk strategy too much, you know, looking at the Lottery Commission one, and what jumps out at me is production incentive payments. And I think to the Treasurer's Office and Wyoming Retirement System, and wow, that took years and years and pulling teeth to gain an understanding. So we can take that conversation offline a little bit, but I just wanted to make sure that everyone is sort of on board with those, I don't want to say changes because they're not done, but potential changes about, you know, for example, if a legislature said, and Anthony, is there anything else we should put in here? You know, that he is okay to say that those things were discussed, so.
And Madam Chair, if I make one clarification, right, these are just quotes from other statutes, right? There's nothing to say that we would want to, if we wanted to gain operational efficiency in the immediate term, I would be very happy to scrap the incentive payments portion of that. So he gets
Exactly,
things, so he gets things
exactly,
done and
yep.
out there before you need to worry about how much money everyone's getting,
Exactly.
right? So
Yeah.
there's a kind of a balance for us within these things, but this is just the statutes from other
And the
parties.
beauty of that, though, is that it's established and is working for another entity too. So, no, thank you. I know that was sort of an awkward conversation, but I wanted to make sure that we gave the director some level of muddied consensus. I think potentially that bill could be up tomorrow at noon or Monday at noon, most likely, but we will know that by tonight, I would think. So, okay, are we okay on that topic? Any other comments? Let's move on to RFP preparation memo.
Thank you, Madam Chairman. I've been keeping my eye on the clock. It's already 11:10, so we'll try to go through this a little quicker. Again, I don't think this is anything that requires any kind of vote, because the RFPs are going to need to be an ongoing process from now until our next commission meeting. That'll be my work with you as members, as the commissioners. It'll be work with A&I. It'll be work with ETS. What I've done here is essentially just try to replay where we are in the process and what functions we're looking to build out, and then how we intend to consolidate those down to a manageable amount of RFPs. So page 1, background, all this section is saying we intend to have the RFPs live on March 22nd, closing on May 10th. Our next commission meeting is scheduled for March 21st, so the goal would be between now and then to align on what is, I think, going to be 5 RFPs. And again, that's up for discussion, but we keep it, we consolidate a bit, and then we, roll those out. If we can have the commission come to a vote in the next meeting on those 5, and everyone should have plenty of lead time to take a look at them and get comfortable with them before that, we can have A&I and ETS prep all the approvals, and March 22nd, to have them up and running. The next section down is just a recap of the functions that we put forth in our request for information. Again, there's 4 verticals. There's tech, legal, finance, operations, 27 functions therein. There's also kind of a top of the stack and a bottom of the stack. So the top of the stack is a system integrator who can put together a plurality of front to back services listed. Candidly, my opinion is that is probably no longer needed based on the conversations we've had. And then there was a miscellaneous catch-all bucket at the bottom where along the way we talked to a great number of teams that have a lot of interest in using Wyoming staple tokens, could help us circulate Wyoming staple tokens, but wouldn't necessarily be part of a build out. So we've kind of put them in a catch-all bucket and segregated them as such. So bottom of second half of page 2, analysis, these are just the next steps for us. Draft the RFPs based on the information received from potential vendors and subject matter experts during our 2 RFI periods. Socialize those draft RFPs with ANI, ETS, perhaps the AGO, and of course the commissioners. Receive formal approval from ANI, ETS through their respective online portals. We take that commission vote here on the 21st on the final RFPs. We push out some kind of alert on the 21st to say, these things are live. Sorry, we can't talk to you for 50 days, but if you need it, it's on our Twitter, it's on Farcaster, it's on LinkedIn, it's on our website. And then we hit the big shiny red button to deploy these on March 22nd. So those would be the operational next steps. And then, again, this is my own personal recommendation to the commission. We don't need to take a vote on this. We could certainly workshop it over the next few weeks. I've put forth 5 consolidated RFPs based on all the functions that we've seen different organizations having. So for example, rather than breaking up, the technology vertical into someone builds a smart contract, someone else has, this type of wallet, someone else has that type of wallet, I believe we can have a large amount of functions rolled into one. So RFP 1, stable token development and support, could potentially have smart contract development, the node infrastructure, if they perhaps run their own chain or set up nodes for the chains they operate on. Custodial and non-custodial wallets, front-end development and management, so potentially a website or integration into a website, mobile application, KYC, AML, centralized exchange, customer support, and marketing could be hypothetically rolled into one RFP. It would be a big one, but it would be the bulk of what we need in one spot. The second one is a intentionally kind of independent role. RFP 2 would be stable token code review. I make that analogous to the smart contract audit. You obviously want a different, much like financial audit, which is its own separate thing as well. You want someone, who didn't write the code reviewing your code. So I've mapped that smart contract audit to its own RFP. We may also want to think for this one particularly, going a bit broader than smart contract audit and just call it a code audit. Because one of the concerns that Commissioner Reville brought up several months back, but I still lose sleep at night over sometimes, is if we start stitching different pieces of technology together, some things might break if they weren't built to play nice with each other. And we should have someone looking at those integrations, those API calls specifically, to make sure that we don't break anything by accident when we're trying to staple together different pieces of tech. Now, I think we de-risk that quite a bit by putting so many functions into RFP 1, but for RFP 2, I think it would be smart contract audit and beyond, right? So just someone who could be kind of like almost like an outsourced part-time CTO looking at everything we're doing. Moving on to RFP 3, security and compliance. What we found is most of the firms we talk to have their own kind of cybersecurity, right? If you're playing around in the space, it's, cybersecurity is critical, so everyone kind of has their own thing. I think how this will net out is we had cybersecurity in tech, we had blockchain monitoring in legal, and we had data analytics in operations. I think those functionally become one thing. We just have one party looking at all the chains we're on, and that party will likely be in organizations also running blockchain intelligence and making sure no nefarious action is happening. So we had those split in different buckets, but at the end of the day, I think that will become one RFP that is done by a robust partner who can kind of oversee all of that. Moving on to the financial side, again, through conversations I've had with the Treasurer's Office, and I thank Norman LeBlanc particularly for all his assistance in not only bringing people into the fold, but also facilitating some of the specifics of these conversations. There are financial organizations that can offer significant services to us, kind of like a one-stop shop, right? A place where we can deposit dollars, they can take those dollars and buy the treasuries with them, they could rotate them, they could provide their own accounting services to us on that. I mean, we still need, an audit doesn't absolve us of that, but they would be ready to provide those attestations, strike a daily net asset value to make sure we're staying on par, and publicize that as we see fit. So, and Norman, if I Good? He gave me a thumbs up, so I didn't say anything that was wrong. I didn't misrepresent any of the conversations. And Norman, thank you again for all your tremendous help, and the Treasurer's Office in general for all the assistance here. And then the final one, much like the code audit, the financial audit would have to be done by independent auditor that we would bring in for those, monthly attestations and assurance reports and the annual audit. So that would be very much its own thing. But I am at a point where I think we can bring a lot of these RFPs together in a consolidated manner that becomes very manageable for us. Couple last notes here, and then I'll stop talking. Notes at the bottom. One is there's one bucket, which was insurance, that I've excised from this process. Couple reasons. One is all contracts we're going to sign, we don't sign any client contracts. All the contracts we're going to sign have to go through the Attorney General's office. And again, Devin, correct me if I'm wrong here, but I do believe we require our counterparties to have insurance. So whatever we have from the get-go should have coverage on it by virtue of the vendor relationships, being that we are availing ourselves pretty much 100% of vendor relationships. If we wanted to have insurance for ourselves as an agency, I have a follow-up conversation coming with A&I. It does sound like agencies have their own insurance through the state. Now, does that include agencies that go issue stable tokens on a blockchain? That would be new to them. I think it's new to everybody, but the conversation will happen there. And then if we wanted to have some kind of umbrella policy, that's going to take a while to get there. I've had one or two conversations around the actuarial math that would be involved to figure out how you would insure a product that might be across multiple chains, different node infrastructure on each, different customer base on each, different wallets on each. You start getting inside rabbit holes, inside of rabbit holes, inside of rabbit holes pretty quick. So that will take some time to get through. It's certainly not off the plate. It's a very interesting conversation, but just not one that we're going to have done in the next month. Moving on to note 2, accounting services. This was thinking that we would perhaps need someone to help us with books and records. I think having, again, assuming the budget bill goes through as planned, having an allocation for functionally a CFO inside the Stable Token Commission would be that role. So we've de-scoped that from the RFP, and that's an internal role that we can work a lot closer with. That way, when we have very strange and nuanced questions around our financials, there's someone who's dedicated to answering those, and we'll be ready to do so. And then I've also taken out from the RFPs decentralized exchanges. I don't think those are really intended to be something we would RFP, as Commissioner Novice has brought up multiple times. You can't really give an RFP to a decentralized entity that doesn't have ownership. However, and someone did ask in public comment about this several weeks back, I think decentralized exchanges would be resellers for us, would be licensed service providers at some point in time. We need to figure out what that framework looks like. And again, going back in time here, Commissioner Reville has asked questions about, where these tokens end up. I think whether we want them, how do you phrase this? When stable tokens are live on a blockchain, they will end up in a liquidity pool somewhere. The question is, how do we incentivize those as relationships with those things versus having it happen just on its own, kind of organically. So I'm going to pause there. I'm sure there's lots of questions, but that is the outlay as I've kind of designed it based on the conversations I've had with potential vendors to date.
Director, I think that's a wise decision. I know we want to be as careful and surgical as possible, but putting out 20 RFPs is not a realistic endeavor. Putting out one is a lift. Are there questions or concerns right now for Anthony regarding this?
Just a recommendation, the process I agree with. On RFI 1, I would remove KYC and AML, Anthony, and put it in the compliance KYC with security and compliance. That's it. The remainder seems to flow, but the process for identifying your customers and preventing money laundering should go within security and compliance questionnaire.
Okay, so just through the chair. So I'm very clear about my mental model here that, because again, we're talking about kind of the broad strokes functions. Part of this will go back to consortia, right? I'm not aware. So if we're talking about RFP1 and we put KYC and AML in there, I think it would be more than one entity perhaps that's providing that, and the KYC and AML will be outsourced as part of, let's say, onboarding to an exchange, versus my thought process for security and compliance is very much like, we're the ones monitoring the chain, we're the ones who are going to detect illicit activity, we're the ones who are going to do something about that should that get detected. I don't know if that would be the KYC AML bucket. Perhaps it's just another thing we have to kind of carve out, and I would be open to saying, RFP 6 is, onboarding. We have that separately. I'd be very open to that.
No, because you're absolutely right that the either exchanges or venues in which retail customers will get access to the token is not through us. It's gonna, and those exchanges or venues, we need to have their own KYC AML program. I'm speaking to ourselves KYCing those parties that we're gonna be in relationship with and the provision of those services to the commission.
So,
There are two types.
so
there,
through,
I think.
through the chair, so Commissioner Naves, to quickly just put a bow on it, are you referring more towards like know your business, like KYB, we're doing counterparty checks? Okay, that's very helpful. Thank you.
So when I use the term KYC, I use it very broadly. I use customers a B as well. But that, yes, know your party, right? So I want to make sure that we are able to have those internally. And the parties in which we're going to be doing business with and that are by law required to comply with BSA will have to do their own, will have to show to us how they do that. We're not going to rely on their processes because they're theirs to fulfill. We want to have our own. So there's going to be two buckets of KYC AML.
Thank you for the clarification, Commissioner Naves. That's helpful. And I agree on that. And I recall from my own audit days, trust but verify, right? So right there with you. That makes a ton of sense.
And I'm assuming that anything as we review this over the next weeks and months, send feedback to Anthony and, as we have more time to look over it. All right, on to next steps.
I would just quickly, through the chair, ask if there's any questions online.
I have none.
No questions here. Thank you.
Thank you, gentlemen. Next steps then. So a couple of things that were being worked on and are nearing their completion as well, just didn't get it through to a presentable format today. The revenue model and the revised business plan. So, taking some of our discussion, for example, the business plan, we're going to be taking in some of the discussion that we had on agency structure anyway, to put that in there. Revenue model goes in the business plan as well, and we'll get through all of that. The RFI period does end on March 4th. So next time we meet, I'll have a final RFI list for you. One thing to note is we will have, that would kind of implicitly put us in a little bit of a gray period between March 5th and March 21st, where we don't have an RFI open, but we're not precluded from talking to anybody through the RFP. And I'm assuming we'd still be able to have open conversations. We would cease taking in formatted submissions through public purchase, right? And public purchase would be closed. So that's other consideration. Draft RFPs we just talked about. And then I think that is it on the next steps. I will just quickly mention we have, in terms of upcoming meetings, again, our next meeting is scheduled for March 21st, same place, same time. And as we've talked about at length today, the budget session is ongoing, adjourns March 8th, and that takes place here at the Capitol. Are there any questions on next steps before we move to public comment? Well,
All right,
if
well,
there-
we'll know a lot more at our March 21st meeting.
Yep. And I would say, just to reiterate, with public comment, anyone who would like to speak, we need first and last name and 3 minutes of speaking per party. Is there anyone? Head over to you, Madam Chairman.
Is there anyone, we'll start here in the room. Is there anyone in the room wishing to provide public comment? Hearing none, do we have anyone online wishing to provide comment? All right. With that, is there anything else, anything for the good of the order from anyone online or here? Thank you, Director. I really think that agency memo, while painful, is one of the most useful documents we have so far to wrap our arms around where we are and where we aren't and where we need to go. And so with that, I would entertain a motion to adjourn.
So moved.
Is there a second?
I'll second it.
Okay, all those in favor say aye.
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 Opposed? All right, thank you all.